PSU banking recap. Let's talk about that in greater detail. The management at Bank of Baroda is now with us. Papia Sengupta, ED at Bank of Baroda, is with us. Right now. What do you make of the PSU bank recap? Do you think it's sufficient enough to trigger growth once again in the credit market?
Oh, definitely, this will give a lot of growth capital to all the banks which had actually stopped lending because of the paucity of capital, and this will surely boost up sentiments, and this will go a great way in helping the banks to again let their asset book grow.
Okay, fair enough. Can you also give us a sense as to, the CET ratio that indicates the need for additional capital? Do you expect capital infusion from government into PSBs in the near future?
Yeah, the government has already announced a 70,000 crore recap. So definitely that would be growth capital for a lot of banks, and that will definitely help.
You just said that this will provide the much needed growth capital to the PSB. Can you just elaborate on that? With the ongoing NBFC issue, the way they are not doing, how can banks play a very important role once they get growth capital?
Now you see there were so many banks under PCA, so the lending had almost stopped, and that was where the NBFCs had actually come in. Now with the NBFCs also facing problem, banks had also in the past lent so heavily to NBFCs, so almost every bank had reached their sectoral caps. So that was an issue, and also every bank has to retain its capital CRAR and also the CET1 ratio at more than 8.5. So now many of the banks, because of the PCA and because of the NPA issues, they the capital adequacy was becoming a problem. So now with more capital there, and many banks, although they were they were maintaining the statutory requirement of the CRAR, but definitely needed funds to grow. So I think with it's a great boost for the entire PSBs, with the government deciding to infuse 70,000 crores.
A lot of measures were announced regarding the MSME space, regarding companies where turnover is less than 400 crores in terms of tax SOPs, what they were giving. Do you think that was much needed, and that can also trigger a credit growth, because this is an area which was really languishing in terms of growth, in terms of how people want to lend to them?
Yes, I think the government has. This is a real positive for the MSME sector, because taking the turnover from 250 crores to 400 crores for a 25% tax, and is definitely a big boost to the MSME sector, which that would mean that they have more funds available to them to also boost their TNW and things like that. And the government has always been giving a push to the MSME lending. Even if you look earlier, there was that incentive for banks, even for in the restructuring phase, there was a incentive to banks also, like in the sense that the 90-day norms was pushed to 180 norms for declaring NPAs. Then MSMEs restructuring packages were allowed for MSMEs which were following certain norms. So, and definitely this is going to help. And also, if there is more, bringing up a separate platform for the MSMEs, definitely all these measures will boost the MSME, And not only the MSMEs, also, if you look at it, that the these NBFCs are also, etc., they have been allowed to come into the TREADS platform. Then for the NBFCs also, for banks to purchase the pool assets, government is allowing a one-time short-term guarantee. Of course, that may not be, it's only a one-time short-term guarantee, so that might not add up to very much. But definitely these are postures which are very positive and give pointed, these are pointers towards the banks that, which will help them to increase their lending to these sectors.
Right. Let's just talk about the current issue that's going on with the liquidity that NBFCs are pointing out to. How are you seeing that in terms of impact of growth? And when do you expect banks again to increase their share versus NBFC over a period of how many quarters do you expect that overall banking sector will see a higher growth than NBFCs if the liquidity issue persists?
See, the liquidity per se is that what is not allowing actual transmission in the interest lending rates. But one good thing which I see of the this present budget is the government's decision to borrow from the international market. So this will definitely bring ease the domestic savings rate, and once the domestic savings rates goes up, I think the domestic interest rates will also start coming down. That coupled with some of the small savings rates, if they come down, there will be much more liquidity and available to the banks at a lesser rate. So I think also more and more now people, if they see that savings is at a better rate, and liquidity, so this will help the banks in easing up their liquidity. So that will definitely help the banks also.
Given the fact that we are now looking at interest rate cuts in the upcoming policy, I just want to understand from you, how will it impact your bank, the sector as a whole, an overall lower interest rate regime?
See, when we talk of the bank's interest rate cut, that was just what I said. When the repo rates cut, they don't automatically imply that the entire interest rate goes down. Of course, the government bond yield does come down, and that is a positive from the banking perspective, in the sense that we make more treasury profits by sale of investments. But so far as the transmission is concerned, unless the small savings rates actually come down, and because it becomes difficult to transmit the rates. Now for that to happen, for the transmission rates to happen, the small savings rates have to come down, so that banks can, banks rates become as competitive as the small savings rate. But once the entire savings flows grows up, then we do believe this will be a positive for the banks, because ultimately the banks can, when we are in the MCLR regime, the cost of credit is actually dependent upon the cost of funds that we get, and banks do not borrow that much from the repo market that that percentage can be actually passed on to the customer.
All right, thanks so much for joining us this morning and taking us through your views, Ms. Sengupta.